So, you want to be an accountant. That's completely understandable. It's one of the most sought after jobs in America and can be very financially rewarding, with the national starting average being $48,000 annually. That's really good for someone who just got out of school. Yet, being an accountant isn't all just fun and games. There's a lot of things that you have to remember before jumping into the field of financial management, especially if it's not your own money. Like I said before, it can be a very stressful but financially rewarding job at the same time. So let's jump straight in. Judging by the fact that you're sitting in an accounting class right now, you probably already know what accounting is. So let's take the plunge into the actual accounting process. It's something called the accounting cycle. So what exactly is the accounting cycle? When do we use it and why? The accounting cycle is a series of accounting activities included in recording the financial information, or a fiscal period. Every business can have a different fiscal period, yet the most common one would be the yearly cycle. So let's jump into step 1 of the accounting cycle, where source documents are checked for accuracy and transactions are analyzed into debit and credit parts. Remember that credit always goes on the right and debit's on the left. You'll need to remember that for the rest of your accounting career, as if you didn't know that already.
Debit's on the left, credit's on the right, debit left, credit right, debit left.
Okay, enough of that, let's move on. Transactions make up your base when it comes to recording all of the transactions your business does. Without those transactions, there would be no accounting. So now let's move on to step 2 of the process, which would be recording all of the transactions that you have made into something called a general journal. But what is a general journal? A general journal is a journal with 2 amount columns in which all kinds of entries can be recorded. When you put information down in a general journal, it is called journalizing. We journalize information in a general journal to have all of our transactions in one place, all collected, living in harmony, waiting to be put in general ledger, which leads us to our next step, posting to a general ledger. A general ledger is an account that contains all accounts needed to prepare financial statements for your business. Here's when we get into the very technical part of the accounting journey, because we start opening new accounts, using account numbers, etc., etc. To start off in a general journal, you have to write out the account title after the word accounting in the heading, whether it be cash, petty cash, supplies, you name it. After that, you'd have to write out the account number after the words account number, also in the heading. Usually, the first number of the account title signifies whether it is an asset, liability, or owner's equity account. What it basically does is it divides the general journal into a bunch of smaller accounts to keep things much organized. Don't forget to post ref. So after you get done with that, we run into putting all of our information onto a worksheet, which includes a trial balance that is prepared from a general ledger. So a worksheet is a columnar accounting form used to summarize the general ledger information needed to prepare financial statements. And stemming from that, a trial balance is a proof of the equality of debits and credits in a general journal. So here's where we start getting these 3-lined headings which show the name of your company, the words worksheet, and the date of the report, which is written out as 4-month ended, and then the date. Basically what you do is you write out all of your accounts into the debits and credits, which are in the trial balance column. At the end, you should have an equal amount of both debits and credits, and now you're ready for more work. So next to the trial balance, you have to start putting in the adjustments. No business ever buys supplies and just lets them lay there until they go out of business or become a multi-million-dollar company. They get used up and need to have a report stating how much money has been used. So what you do is you take the balance of the supplies account and subtract it from the amount of supplies on hand that are still with you, which will give you an amount of supplies used during the month. Same process goes for insurance. So you got past that part and now need to go over to the balance sheet and income statement. What you basically do for your balance sheet is copy your accounts into their appropriate credit or debit columns. Then you take your expenses and revenues and put them into the income statement. When you're done tallying up all your accounts, you need to record your net income or loss by evening out your balance sheet and income statement. After that, you're done with your worksheet. By the way, I did say that an accountant is one of the most stressful jobs in America, right? Still with me? Great, because now we have to get our financial statements together. But what are financial statements? Financial statements are financial reports that summarize the financial conditions and operations of a business. They basically tell everyone that is involved and interested how well their company is doing. It's mostly stakeholders that look into this kind of information because their income and jobs depend on how good of a healthy profit is coming in. So where do we start? By filling out a new form. Again, we put the company name along with the month, but this time we put down income statement on the second line as opposed to worksheet. We divide our lines into 2 sections. Income and revenue. Under these sections, we write down our accounts that are affiliated with each section. For example, sales will go under revenue, and any expenses will go under, well, expenses. Pretty simple and straightforward if you ask me. Afterwards, we dedicated a line for total expenses and net income and follow up by recording them down. Here's when the fun part starts. We have to next write down our percentage of sales in the last column. So there's some math for you if you're into that. So far so good, right? Okay, so now let's move on to our adjusting and closing entries where we journalize them from the worksheet. So remember our very long worksheet that we just love to do? Yeah, let's bring that up one more time because we need to take our adjustment and closing entries and put them out in our general journal. So we have to start off by putting our heading, adjusting entries in and writing the date. Afterwards, we take our adjusting debit account and record it along with our matched credit account. Remember to indent your credit account. So now we move into our closing entries. Closing entries are journal entries used to prepare temporary accounts for a new fiscal period. To close a temporary account, an amount equal to its balance is recorded in the account on the opposite side of its balance. For example, our sales with our income summary. It's the same process as putting in adjustment entries, yet this time you have to determine which accounts are temporary and which accounts are permanent. You wouldn't want to throw away money, would you? So now we're down to putting our entries into the general ledger from the general journal. Almost there, guys. So what we have to do is basically update our general ledger with the information that we have gathered in the last step. This time we're evening our accounts out to zero, the ones that are temporary. Now we start our finishing post-closing trial balances. Congratulations on making it this far. A post-closing trial balance is a trial balance after the closing entries are posted. We start off by putting the correct heading with the name of the company, the title post-closing trial balance, and the date, which is just written as the month, day, and year. We write out all the accounts that weren't closed, so cash, petty cash, any accounts receivable, accounts supplies, insurance, accounts payable, and capital. Got that? Good. We total up both the debit and credit column, and we have finished the accounting process. Congratulations on getting this far in the accounting process. If you haven't ripped your hair out, clicked on another video, or simply walked out the room, you are ready to become an accountant. Thanks for watching.